Good afternoon, everyone. Gabe Velazquez here with you, transparenttrading.solutions.com. Welcome for a Friday Cinco de Mayo, if you celebrate that type of thing. So let's go ahead and get started. Everybody obviously is aware Apple earnings. We had a jobs number today. But all in all, markets are nowhere. I mean, for literally for the last month, they've gone nowhere. So in terms of any kind of new levels, any kind of new developments, we are still largely in the range 4,100, 4,200. We closed right at 41.51. We came down to 40.64, which is took out that pivot low, and essentially are doing the same thing. We just kind of back and forth, back and forth. So nothing really changing there. Under the surface, there's a bunch of stuff going on, but I'm going to write about that this weekend. If you want to sign up for the newsletter, there's a link below. I will be running a class about 2 weeks from now. We did have a nice class that just passed here last Wednesday about odds enhancers. We had very nice turnout for that. So I will have another class if you want to spend 5 days with me as well, all that stuff. So anyways, that's getting out of the way. Also, put some commentary in the chat below so that I can keep growing the channel, so I can keep doing this. It's actually one of my things I look forward to every day, what I do these Tuesdays and Fridays. So anyways, all right. So listen, we have some levels coming up here, a bunch of stuff going on outside of the equities. Equities still, we had another kind of attempt at a break. What is it, like Thursday? And then again with the soothing, if you will, of the, again, more bank crisis thing going on. What was interesting today is the non-farm payrolls actually came in hotter than expected, hot inflation, and yet the market still rallied, which probably tells us that, people are getting comfortable. At least right now, they're still very complacent. The VIX coming all the way back down again to 17, can't crack 15. We may be in a situation where VIX is going to trade between 15 and 20. We did actually come up to 20 when we are at the lows. So it looks like that may be the new regime here, 15 to 20 on the VIX until further notice, right? Until in the foreseeable future. So again, just to kind of recap here, we've got some lows below around the 4,000. If we can break below that, we've got a gap at 42.21. We actually have some decent levels that we're trying to short in between that, around the 41.75 area as well. That's on the S&P. We've got next week, just kind of looking to next week, CPI, PPI, more of the same stuff. Earnings are done now. Apple was the last of the mega caps. There's still some other companies, and obviously they blew it out as well. By the way, Apple is coming into some major, kind of supply areas around 175. That's going to be interesting to see where that ends up. We close right at 73, so that's going to be worth watching there. Now on the Nasdaq futures, I've been mentioning these levels. I think we had a very strong pullback off very close. It was a near miss. Actually, we had we had 3 trades this week that came very close to our levels and then turned and left us in the dust here. But it is what it is. That 33.76.50, 13.437, and then on the bottom side, we actually came right close to 1,300, to 13,000 again, and turned right back up again. So generally speaking, it's just, again, more of the range trading. Still the NASDAQ with Apple, mega cap still leading and still very narrow. We had a little bit broader rally today. We had some other stuff. But generally, if you look at if you go through your stocks, you're really not getting any kind of meaningful breaks other than even the mega caps are not just coming up. A lot of them are coming up. If you look at Google, Amazon, they really haven't made any headway. And interesting, even Meta hasn't made any significant headway since last week's earnings, right? It's kind of sitting around 220 area. So yeah, just kind of a fascinating situation. And, again, from a trading perspective, which is really the only thing that we need to be concerned with, is, you just got to trade in a range. Really, you can't, again, you can't get too overly bullish. You can't get too overly bearish. You basically just have to be very, uh, you know, nimble and understand the kind of environment you're in. What happens if you get too bearish? You're going to get smoked. What happens if you get too bullish on the top end of the range? You get, again, so you get the idea. So you have to be adapting to that. That's really the lesson. I've been talking to my members about that. It is challenging and it is causing a lot of frustration for a lot of people if you don't understand and you're not flexible and you're too dogmatic in terms of your strong opinions of where the market's going to go. If you do that, if you're doing that now for the last couple of months, you are probably losing a lot of money. Okay. So you can't do that. You got to stop doing that until things change. So that's really the lesson for today, if anything. Interestingly, the small caps keep bumping right against that 1700. I'm getting warmed up to the small caps here, 1700 to 1825, very clearly defined level. This whole range trading notion, you may have to, maybe not, just frame it around these levels and trade around them. Really, that's really at the end of the day, that's really what's been working. Bond market, man, that thing is all over the place, very schizophrenic. One day up, one day down, one day up. Huge moves in the bond market. That's, I think, again, a symptom of the confusion and everything else going on in the marketplace right now. But until that break, and again, we cannot get any kind of break. I think I mentioned when I was with you on Tuesday, this 129 on the 30-year, very, very strong support. When that's going to break, I have no idea. On the top side, you got 134. Again, we're sitting in no man's land. Very challenging unless you're trading the extremes on the bond market. Similarly, interesting, the 10-year came right up to 117, which I've been mentioning to you guys in again, very clear, discern resistance, came right up there, pulled right back down, and that type of thing. So, and then again, we closed right in the middle part of the range. The challenge with some of trading these pivots and resistance and support levels is the stop placement. That is where it becomes a little bit, because what happens is if you have a kind of a, like, for instance, if you look at 117, you have to, when you look at that, you go, well, I'll short at 117. Sometimes they take it 3 ticks up beyond that on these pivots, and that's where it becomes a little bit of a challenge to trade the extremes on these range trade. However, that's really what's been working. If you think about it, now you could use options or whatever to trade TLT, and even that hasn't been having enough move to really warrant any. The options have been a bit of a challenge because of the volatility drying up here with VIX, sitting in the mid-teens here, low to mid-teens is a bit of a challenge. So, kind of been a little bit backing away from our options trades because of the kind of bit more focused on the futures. So that's really on the bond market. Dollar similarly, right? 102.34, 184. Talked about this on Tuesday. Still there, back and forth, no break. And that in fact also is putting the euro 111.17, 109.554. However, here's the thing. Canada focused. I've been talking about Canadian had a huge move today, coming right up to the top end of the range, 72.28. So that's looking better. We were trying to get long a little bit lower than where it bottomed, and I'm not really concerned about what's causing the move in Canadian dollar. I'm interested in Canadian dollar now simply because it's got volatility. It has some price movement, and that's what we need. And anything that is chopping around, we're not interested. This actually now is something that creates some really nice opportunities, and therefore we want to be looking at that. So take a look at Canadian, either for a pullback or for, again, if you look at your charts, you can clearly see some of that resistance coming up. But you can see the huge move in Canadian. Still, I'm not, again, inquiring minds want to know. I don't really care. It doesn't matter what's going on with Canadian. That's the only currency that's moving. Also, the peso's moving a little bit now too. Peso's approaching that 56 weekly, 56 and a half, 57 weekly levels on peso. So it did also the peso. So it looks like a lot of these dolls, these kind of commodity related currencies are starting to get a move on. So that's something to be interested in as well in the currency. So to sum up the currency markets, Canada, Mexican peso. We've had some moves in New Zealand and Australia, and they're all coming up to the top end of their ranges. So it seems to me like and it could be maybe oil actually did get a really nice. We'll talk about oil in a second. So it was all about the calm doll. You know what I mean by the calm dolls? If you haven't heard that term, those currencies that I just talked about, Canadian, New Zealand, Canada, and Mexican peso, are more or less tied to moves in commodity markets, particularly in oil, and particularly in some of these other commodities, the metals and so forth. And so you notice there's something afoot here in these currencies. Although now, if we, maybe oil seems to have bottomed out. I mentioned that we had a huge spike, huge volatility spike down to 64. Had a huge ricochet off that 63, 64 level. We've literally moved up almost close to $10 off that low. That was an algorithm. I think they caught a lot of people off sides here. It was right at the open of a Globex session on Thursday. And that was really interesting. And so we've had some rebounds. So it seems to me like that was the kind of a capitulation low on oil. We do have some levels coming up at 75. We are trying to get long oil. We actually try to get long oil the day, remember, if you look at UCO, the ETF, that clearly wasn't, because that was just a kind of an algorithmic kind of washout in oil. So that's not really seen on the charts if you look at UCO, but clearly looks like oil may have put in a bottom. So look for some opportunities. That doesn't mean you can't sell oil. Oil has some really nice levels coming up around 75, 76. So oil also now is presenting some really great opportunities after that big drop and then that big reversal coming up here. So check out oil. Nat gas just meandering, trying to hold $2. We did get a nice bounce off of $2. We'll see if $2, is the actual, what I call fair value. In other words, at $2, maybe that's the floor. Maybe that kind of discounts all of the, all of the supply and all that's been holding down, nat gas. We'll see. We're still sitting in boil. It's we've got about 4 weeks still left on that position. We're underwater on it clearly, so we'll see. But we have a really tiny, again, tiny position. In fact, the futures have you can still trade futures on that, and maybe we go into a range 2.5 to 2. Who knows? It's been it's been one of those markets, but any kind of weather change, any kind of supply changes in the fundamentals, and as you know, that market just out of the blue can really start creating some really lots of volatility. All right, let's get into the metals. Gold, again, gold, it's like the mirror opposite of oil, had a spike right up to the prior highs, actually did not take out the prior highs. I think it was 2086 was the high. Right back down to 2000, probably trapped a lot of longs because everybody's starting to get bullish on gold. So be careful. I think gold probably eventually does go out and make a new high. However, you can't chase it. I think you're better off looking for maybe a pullback down into the 1985 area to get long, or even further down. It wouldn't surprise me, especially if the dollar breaks 100. That lower band of the. If we could get the dollar moving, that's going to change the dynamics in gold. So, it's gold also has been very choppy, very rangy. Still looks bullish on the charts, but you got to be careful where you buy gold if you're interested in gold. I would rather, again, on a probability scale, you're probably better off trying to buy the pullbacks in gold rather than try to chase it. Okay. Silver, similarly, still range trading. They try to break it out above 26, failed. Looks very bullish as well. We're actually trying to get long silver as well, but you can see the charts are very messy on silver as well. Copper looks to me like it's holding around the 382 level right now. That could be something that's going to ready to, with all these, moves in the com dolls, oil bottoming out, grain starting to pop. I think I mentioned to you guys we were in corn. We actually missed wheat, unfortunately, down in the low $6 range. That thing is trading at 658. Looks like it's headed to 7. Corn starting to shape up, finally getting break. We were kind of in this range to 590. Let's see if it breaks $6. That looks like it's firming up. And then soybeans also $14 a bushel. That seems like they're firming up too. So grains are very interesting. Maybe grains are starting to bottom out here a little bit and trade up to the bottom part of those ranges. So very interested in the grains. So aside from, all the stuff, everybody kind of hyper focused on the indexes. My point to everybody is there are other areas you need to expand your horizon. You need to, branch out a little bit if you're going to trade futures and get out to these other markets because there's tons of opportunity. Unfortunately, most people get hyper focused on one or two markets and miss out on all kinds of opportunities. So that's kind of what I'm focused on. In addition, under the hood, I'm not going to talk about that a lot today here, but there's a bunch of stocks that are, all over the place. The stock market under the surface is still a lot of stocks had their moves. Like I mentioned, if you look at the chart of, just to give you an example, Meta, right? That was last week's story. So if you look at Meta, that thing ran up to 242 on the earnings, and in fact, it's about $10 lower than it was a week ago, right? So everybody, kind of assumes that all these mega caps are like zooming past. That's not the case. Look at the chart of Meta. I mean, that thing is actually pulled back, and you can make the case it hasn't done anything. Clearly Apple was the big one this week. Last week we had the, Microsoft, whatever. And Apple is now also coming into, 175 big major daily distribution level. So it's going to be interesting. Look at your chart on Apple. You can see clearly we're coming up to 175, 178 area. That's coming up to. So it's going to be fascinating next week if they can break these stocks out. I still believe we're going to be in a range, and we're really not going to get any kind of strong move in either direction until the Fed's done tightening. That's really in essence, that's you're not going to get a bull run here, like we used to have back, a year, actually 2020, 2021, I'm sorry, 2021, all time highs and all that. That's not in the cards anytime soon until the Fed tells us that it's done. And it's not going to be done. Here's the thing. Inflation is still running high. Even this morning, this morning's numbers with a jobs number, I mean, there's no way inflation's coming down to 2%, their target. So we're still going to have a lot of the same on these things. So just trade accordingly. There's still opportunities. There's I just went through a bunch of currencies and grains and all that stuff. Even, by the way, now everybody's fixated on gold. Is gold? I mean, I'll ask you: is gold a great trading vehicle right now? Absolutely not. I mean, it's all over the place. But again, everybody, it's like this herd mentality. Oh, gold, it's going high or whatever. So then you gravitate to that, and then you get all chopped up with gold. So that's not where, silver, similar. It's all chopped. You're getting all chopped up with that instead of focusing on the grain markets or some of these currencies or whatever. So that's kind of my little takeaway for you this Friday, May 5th. Okay. All right, everybody. Again, if you want to sign up for the newsletter, hit the link below. Give me a thumbs up. Put some commentary in there. Have a great weekend. Enjoy your margarita today if you're going to do that. Cinco de Mayo. If not, have a great weekend, and I'll see all of you on Tuesday. Okay, take care.